Hello, welcome aboard, Walter here. We're going to talk about winning trading, what the trade-offs are. So let's get into it. And before I forget, if you want to go to nakedtradingclass.com, you will see this page here and it'll have a video. It'll work you through 3 ways to grow an account quickly. And I hope that it helps. So let's get into the charts, and I'm going to share with you the old standby, right? When we first start trading, and I'm no different from anyone else, I did the same thing. I wanted to win, so I did as much as I could to figure out how to have a high win rate. What can I do to win more often, to get a better signal, so to speak? And so one thing you can do to do this is you can use the old buy stop, sell stop method. So let's say, for example, this is probably not the best chart. Let's find a better one. Let's say that these pound charts have a bit of a retracement move going. Let's try this one. All right. So the Aussie Cat or Aussie Swiss is one I'm watching, and I'll be looking to sell, but right now as I'm recording this. But what's more important is, what if the market prints a big bearish candle? A big bearish candle might look something like this candle right here. If that happens, then what I will do is I will put a sell stop. Like if I could just cut this candle out over here and place it over here and it just falls through this trend line, that would be a drop trade. That would be a nice setup. So I could put my sell stop below the candle, my stop loss above it, and if the market never pushes through the low and takes out the low, then I'm not in the trade. That's one great way to improve your win rate, because here's the thing. If the market's going to stop me out, what does it have to do? It has to go toward my stop, right? And I know this seems simplistic, but a lot of traders, we forget that there's the pound yen. Let me show you another pound one. Let's go back to that pound kiwi that I had here. A lot of traders, they would rather get in on the retracement. Now, here's what the retracement's going to give you. So, for example, traders who are looking at this pound New Zealand 4-hour candle, and they're thinking, you know what? This is a bearish candle. I want to sell. Well, here's the problem with that. If you get in right here on the retrace, it's already almost to, like, let's say the stop is at the other side of the candle, which a lot of traders trade that way. Not everyone, I know, but a lot of traders are going to have their stop loss up here at the top of the candle. So what does that mean? Well, it means that we're pretty much almost there. Like, the market's 2/3 of the way, 3/4 of the way to the stop loss. So, and guess what? It's never gone lower. It never made a new low after this bearish candle. Now, you could argue whether it's really that bearish because it snapped up and closed up here and gave us a bit of a wick. But clearly, those traders who were thinking that this is a sign that the market's going to go lower, well, they weren't exactly right. So thing number one, if you want to improve your win rate, is to use buy stops and sell stops. And use them off of the candle lows and the candle highs. This is a great way to ensure that you only take a trade if the market goes in your direction. Now, can it still come back and stop you out? Yes, of course. But the very worst trades are the ones like this one right here, where the market just goes boom right against you straight away and goes all the way to your stop level. I'm not sure that that's the case here, but it's gone 2/3 of the way to the stop loss level, and it never made a new low. So you want to avoid those. Now, the payoff here, or the trade-off really, is that if you do this, obviously what's going to happen is I am going to have a reduced reward to risk ratio. I'll put the Naked Trading class link in here for those that are interested in that. It's just nakedtradingclass.com. Okay? If you want to take the class, it's free. Okay. So the good news is, if I get it on a retracement, like if I were to sell right here, my stop loss is only 60 pips, 65 pips away. If I had sold down here, my stop loss would have been 150 pips away. So the good news is I have a really good reward risk ratio. The bad news is I'm going to take every single losing trade if I wait for the market to go against the expected direction when I take the trade. Okay? So that's really important. So you can improve your win rate by using a buy stop and a sell stop. You will reduce your reward risk ratio, which brings us to principle number 2. Higher reward risk ratio equals lower win rate. And there are very, very few exceptions to this. Really, sometimes you will see a strategy that has a really high reward risk ratio and a high win rate, but then you know where it suffers is in frequency of signals. I have seen some that will have really high reward risk ratios and really high win rate, but they trade like a couple times a year. So that's the issue with that, right? So you have to be careful there. So that's basically the way that you can look at your trades is by looking at in terms of, do you really want to win or do you want to make money? If you want to make money, the easiest thing to do in most cases, if you have a viable strategy, is to push your exits further out. Make it harder for you to hit your target. That's going to pull down your win rate, but almost universally, it will increase the money that you make. Go back and look at our videos where we talk about expectancy and how to calculate your expectancy. There's a spreadsheet waiting for you there. That will sort of enable you to compare systems and compare apples to oranges by viewing it through the expectancy looking glass or glasses rather than the win rate. We typically concentrate on win rate when we first start trading. And then later on, we move into the risk management. And then further on, we get into psychology. And those are the three parts to profitable, consistent trading: the system, the risk management rules, and then the psychology. I hope that this helps. I wish you happy trading. If you want to get more on growing an account fast, go to nakedtradingclass.com and we'll see you in another video. See ya. Bye.